Hey folks, today is September the 19th. It's currently about 8:55 in the morning. As you guys can see here, we're currently in the FX Simplifier trade room. And let's take a look and see if we've had any trades on Sunday or this morning already. All right, so it looks like we took one trade, tiny loss, $7.85. And we have one trade on. It's currently right around break even. USD Japanese yen. See if I have that chart up already. All right, so we can keep track of this and see how it goes. Let's make that a little bit larger. All right, we just got entered into a second trade on the AUD USD, which is right here. So we'll definitely continue to watch these two. Let's see what they're saying about these trades.
Welcome to the webinar. You have entered as an attendee in listen-only mode.
Would be rather flat, and it is, in fact. You can see Euro US right in the middle there is 0.13. So kind of a mixed picture this morning. And we'll talk a bit more about those nuances later that exist here. I certainly see many. So we'll get to those. One that I'd like to revisit is NZD CAD. This is one that tried to break out. It doesn't look like it, but tried to break out a little bit on Friday and came right back. But it is holding this area, and it's either going to be, I think, a meaningful breakout. Probably is going to need this data that's going to occur at midnight tonight to push it one way or the other, or this is where it breaks down. You know, it's funny, just as an observation, and let me bring open this this green chart, which is just a weekly chart indicating an uptrending chart. That's what the color is indicating. You can see this is the beginning of the 6th straight week of upsides. We've had 5 straight weeks of upside, right into a potential resistance area of these prior highs, and yet it's approaching this area with a series of large-scale higher lows. So we have a large ascending triangle that's often bullish, but you do have several weeks up into a potential trouble area. It's a real mixed picture, and it's just so interesting. If you've looked at charts long enough, one thing that you will find is that these kind of tensions, these moments where you have a key level being tested in some way, they often happen right up against a data point, right? We're just bumping right up against a data point that's a high importance item. For example, if you were to look at an economic calendar, it's considered a high importance item, this New Zealand dairy data that we're going to have at midnight tonight. So these confluences of the data point and a key level, it's amazing how many times that happens. I mean, is that something you found throughout the years, Tag? I see it regularly.
Yeah, I'd say that's mostly true. I mean, yeah, there's exceptions, but there's always are. But yeah, I'd say mostly that's the way it goes.
Yeah, I don't mean to imply that that's a given, like there's always going to be a key level tested into any important data point, but just there are some of these points that are approached, and the decision point in terms of price, whether it's going to hold or break or whatever the case might be, often coincides with the release of a pretty important data point. So it's something that I see, and it really requires traders either stay away and wait till the conclusion is made in terms of price, and then use their skill to capitalize on it subsequently, or make a bet into the data. It's just something that I see a lot. So at any rate, I'm going to continue scanning here. NZD US super quiet. is just basing near the highs, which I like to see. We'll see if it can do anything here on a potential break to the upside.
Yeah. One thing, that we look at, and David already mentioned today, but we mention it probably every session, at least almost every session, is when we look at the leader laggard list, right? And talk about, for a day trade, for instance, mostly, there's exceptions, but mostly we're looking at things that are up, 0.29, 0.3 on the day or more, or down 0.29, 0.3 on the day, right? And that's percentage. Basically looking for something that's moving. Why? Because if it's moving, there's probably a reason, and hopefully we can either buy a breakout on consolidation or buy a nice pullback on a trend. And I think you want to get stuff that's actually in a trend. There's some strategies that seem to work pretty well in very range-bound nothing markets. I never really had any success there. And option trading is different there. That's actually fantastic. But for directional stuff, I've never really had any success there. Some people do, but for the most part, we're looking for things that actually move. And so by looking at a list that shows, how much in a percentage term anyway, it's up or down with a currency, if it's up 1/3% or down 1/3% or more, that's moving pretty decent that day. If something's up or down 1% or more, that's really, really big move. And a lot of times you'll get good continuation out of those things. So if you can, find a consolidation, find a pullback, that's mostly our hunting grounds. That's mostly where we look at. We look at everything, so occasionally you'll find an interesting setup that's not in there. But on average for day trading, for short-term trading strategy, it's kind of what you want to look at. Whatever, you use different parameters, 0.25, 0.35, what have you. But somewhere around there seems to be kind of the sweet spot for currencies.
Yeah, absolutely.
For stocks, that'd be miserable. For stocks, that'd be horrible. You want something that's up or down a lot more than 1/3%. But for currencies, that seems to be about the good place.
I agree with that. The market overall, stock market, I tend to still use that kind of just general rule. If you're bouncing around under plus 0.3% or still not quite down 0.3%, you got a pretty lackluster market. Another thing, this is super generalization. I could test this probably without too much code writing. It'd be fairly easy. But huge up days, significant movement, a couple percent up or a couple percent down or more in the stock market. The futures the next morning, in terms of wild volatility, obviously this probably doesn't hold, but it's funny how often the market will open up or down about 0.3% the next day after a big event. In other words, it's kind of people are stunned, and the next day will be, at least at the open, will be kind of in that range of slightly up, slightly down, not really much meaningful movement. At any rate, let me point out one idea. It's kind of subtle. I'm going to use it. It got away from me, and I was not super focused on it, hence it did get away from me. But, just share my thinking for a trade or a setup that could have provided some number of pips. Now, here is a daily chart. First of all, EuroCAD. I'll try to do this briefly so I can keep focused on some other potentially good trade ideas. And it's 9:02, so we are now through our first hour. That AUD-CHF candle is now completed. Our last hour candles are complete. So a couple setups are getting more interesting as I look at my watch charts on another terminal. AUD-NZD, kind of interesting. There are a couple others, but at any rate, let me finish this thought, which is, first of all, very quickly, EuroCAD broke out a nice run from a gap down actually to that candle might not be correct, but at any rate, multi-day run to a multi-week high last week. It has now pulled back for 3 sessions. Today's candle, was another big, ugly, bearish candle. It doesn't look like that now. It looks like a bearish candle, but it was down here trading near the lows. Okay, so third day of pretty heavy selling and a pretty sizable range trading at the low. Let's look at the intraday charts, however. By the way, this is a retest of a breakout. Okay, so it broke out to a multi-week high last week. It's just pulling back. One would expect some level of demand that had initially pushed this up to a multi-week high might still be there at better prices on this pullback. Okay, so that, in other words, there might be some aggressive buyers in that area. So as I looked at the 60-minute chart this morning, it had pulled back to what average? What is this rising red line on my 60-minute line?
We always have.
Yeah, it's always on. It's on every chart, and doesn't mean it's always going to be crucial on every time a price is near it. But you got to pay attention to it, especially when there's a pretty steady consecutive multi-bar move into it. In this case, a multi-hour decline into a rising 200 MA after it had just broken out on the daily to a multi-week high, and now it's pulling back fairly orderly. Well, it gets tested, and what candle do you have right at this rising average? You have a textbook hammer. Okay, this is a textbook hammer. This candle right here, which is small real body, little or no upper shadow, and long lower shadow, at least 2 times the size of the real body. This is many times the size. So this is it's a failure of the bears is what a hammer is, right? Because they were bearish, they forced it all the way down to the low. They failed to hold their territory, and you see it rallied all the way back, close above the 200-hour moving average, close as a hammer. Next hour, boom, bullish candle. And then you have a couple hours consolidation. Does the low of the bull bar here ever get violated over the next couple of hours? No. And so I drew this line just for a potential idea improvement on this setup. Even though it's down a lot, by the way, it's down a lot on the day, and it's still down, but it broke through that level pretty convincingly, and now it's taking a break. So this is just an hourly chart in the process of potentially bottoming short term as the daily pulls back into an area of support. It pulled back right to a rising 13 exponential moving average. Doesn't really matter what the number is. Could be a 10 MA, it could be anything close to that. But the bottom line is larger breakout, now pulling back. And on the hourly, you had little signs that maybe it was going to improve off today's lows, and it did. So a subtle setup didn't get issued, but I'm sharing it to just show some of the subtleties that was leading me down that path of looking more closely at that, and then it got away. NZDUS, again, has not met entry, and let's take a look at this, is pulling back a little bit off of its highs. Let's see if the Aussie dollar is weakening a little bit in the process, and really not much, slightly in Aussie CAD. So we will keep it focused on NZDUS, but it's off the highs. It's not pressing the entry really at the moment. Only data point is this hour, and it's very well, actually 2 data points 10 minutes apart today, folks. They're both of not high importance. Often we don't even mention them, but there is bond buying results. That is great. That is UK data at 9:50 a.m. Eastern time. That's a low importance item on dailyfx.com's economic calendar. 10 a.m. Eastern, there's some U.S. housing related data that's not not the usual home sales data that can be more substantial.
Really today, the only 2 things that are even remotely big are both housing out of U.S. and Australia. Australia might actually be interesting because what expectations are for it to slow, and if it slows even more, that could be something. Because basically what you have, Australia hasn't had a recession in 25 years, which is crazy, but they've had one down quarter. They've come close.
That's astonishing.
Yeah, it really is.
And that has to be largely tied to its proximity to China and
absolutely.
relationships there.
Because even when everything went to crap, then what you saw was even more capital flow out of China. So you had like the housing market got a big buffer, and so they really haven't had, even when everything was crashing, including commodities, they didn't get a full crash. So it's been kind of nuts. But So yeah, in Australia, Canada, same thing. Canada is interesting because it's looked at as kind of a U.S. proxy in this regard, but they also have really good immigration policies. Like their immigration system is actually organized, and therefore you can like apply and like whatever get a visa sometime in this millennia or whatever. I'm obviously kind of down on the U.S.'s overall system. It's not even policies when your systems is jacked, but whatever. We won't go there. But Canada has a lot of immigration, and so what you see there is also what we see in New York and London, where you get a lot of Russian, a lot of Middle East, and a lot of Chinese money coming in, and they put it into housing. You read about some of the places, and there's agents that said, "Oh yeah, I sold that house 10 years ago for like $15 million, and they still haven't come to pick up the keys." I mean, they've yet to go in the property because it's a way to park money. And so some of these places got big buffers from that. Australia sounds like they have. Canada definitely has. I've read a lot of stuff on that. And so you kind of see these housing bubbles that didn't pop because they had a different type of buyer coming in on average. And then it's kind of taken it to some crazy heights. There'll be some interesting stuff there. But yeah, Australia and Canada, I'm really following their housing data and just seeing, because sometime in the next, who knows when, I guess it could end up being a lot longer. But the way it seems like it's going now, sometime over the next 6 to 12 months, there'll be some really interesting stuff there. And as it is, like I said, Australia, what is it here? They're saying previous 6.8%. They're expecting this one to be about 5.2%. That's a slowing already.
Tag, so I'm putting out an idea for AUD CHF at current levels. Short. The stop is fairly tight. There's a counter trend idea, folks. In a sense, it's higher risk, but not in terms of pips. And this is one I'll put on screen. And again, it's current levels short. I'll make this much bigger. Stop is a little bit above the high. I'll read the exact alert as posted in the chat. So active trade alert, AUD CHF short, current levels, and forget that you have to ignore the must trade below the stop trigger price. I'm sorry, that's boilerplate. That is in there. So I will, let me amend that in just a moment. Protective stop is above the high. Maybe you can read that for me, Tag, while I just fix this.
So AUD CHF short, so that's a sell short at current levels, meaning basically right where it's at. It must trade, and so in protective stop is at 0.7415, and the target is TBD, to be determined. So again, as normally what we do is a buy stop or a sell stop, or it has to trade at or above or at or below that price. This one is at current levels. So basically, you want to, whatever, theoretically on that one, you kind of hit the button right now type thing. And the spread's decent enough this time of day that it's fine. You just go out and hit it.
Okay, so this, folks, I went through this about a few minutes ago. This is a counter trend idea. This is one of the top gainers this morning. ADCHF. Normally we're looking to trade with the trend. This is just a counter trend idea. Doji-like candle last hour. Stop is placed above the high. So again, AUD-CHF short, current levels. This was a little bit higher when this was issued. Protective stop, 0 spot 7415. Target to be determined. Just looking for a little pullback within the trend. This is not one that I would be complacent in, meaning look for a big decline and look for any kind of hold beyond the pip room. I mean, this is pretty strong today, this pair, and we're just looking for it to correct down to some support, actually, and potentially just give us a little bit of profits in the process. So I'm going to make sure the stop is in here, folks, in Simplifier, and I can certainly make some more comments.
Yeah. I guess no comment. Oh, whoa. Is that, do you have crickets for an alert sound?
I have crickets for my phone, yes.
Okay.
They call me and I'm ignoring them.
Fair enough, it happens. Well, yen's taken off to it's weakening right now. Euro yen definitely reversed. super strong. Not as much as euro yen.
Okay, I'm going to put this in blue, folks, since it's an open idea. This Aussie Swiss and stop might be lowered. Let's just see how it acts here. Again, very strong. So this is still in an intraday uptrend, which is why this is a counter trend idea, not our usual fare. But just looking for this tremendous rally just to take a pause and capitalize potentially, anyways, in the process. If it proves too strong, then this idea just may get closed out for just a modest loss, even ahead of the stop. Obviously, though, we'll look for it to weaken a little bit and see if it can make a multi-hour low.
So on a trade like this, what are you looking at is when you have your, I guess, ideal take profit level, or well, basically ideal take profit level. What's your roughly speaking, what do you expect out of a trade like this?
Let me go to the ideal. The ideal would be that really this corrects enough to bring it down to its rising 20-hour moving average. Okay, that would be 0.70.
All right, folks, we're now at the 20-minute mark here. So I'm going to go ahead and pause it. As you guys can see, we're now in 3 trades at this point. USD Japanese Yen, AUD USD, and AUD Swiss franc. Let's see if we have the AUD Swiss franc up already. Doesn't look like we do. Let's go ahead and pull that up real quick. One thing I'm really happy to see is that they're using much smaller stops, as you guys can see here. And I'm noticing that on all of the trades that I'm seeing here. All right, so let me go ahead and pause it, and I'll come back with you guys about 10 o'clock or so, and we'll see where we're at with these trades. Okay, folks, it's a little after 10 o'clock. 10-11, as you can see here, and it looks like we've closed out 2 trades. Let's take a look and see. I think they were both losers, small losers, but still losses. 28.35, and I believe they show that here. You can see 14.5 pips loss, and we still have 1 trade open from these particular individuals. Let's see if we can find NZD USD. Just like to have anything that's open, I like to have it up. All right, so that NZD USD is a buy setup. Again, same situation. About a 50 pip stop, 100 pip take profit. Let's go ahead and check in the trade room here and see what they're talking about now.
Welcome to the webinar. You have entered as an attendee in listen-only mode.
Like HR, and I'm like, I don't even get how anybody would ever want to go into that. But, they have different interests in me. I get it. I just don't even get why people want to do other things. And I realize how ridiculous that is. Don't get me wrong. But when they're saying some stuff, I'm like, "Who? You picked that on purpose? Oh, well, good for you. I mean, whatever floats your boat. If you're happy, that's awesome. But for me, if I wasn't happy, I'd move on.
And that's good to hear. I don't think that'll ever happen with markets.
Yeah, me neither.
But folks, just in terms of Kiwi, which I'm focused on very intently here, NZD US 0.73239. According to my feed, that's where it's at. It's just a little bit above entry. It's very, very sluggish. Again, love to see a pop up to the 0.733 whatever area. It's a little bit higher. This is on a short leash as far as I'm concerned. In other words, the stop, yes, the stop is where it's stated, 0 spot 72.94. However, I, probably would not even come close to giving it that latitude. So I can certainly update the stop, but rather than take the time to do that, I'm just watching current market activity and probably be more inclined to exit rather than adjust the stop. I mean, exit for modest gain or modest loss, or ideally a nice pop up to that area. I'd love to see 0 spot 73.3 anything. Okay, that's the area of the declining, slightly declining 200-hour moving average, a little bit overhead. There's a prior high up here. Those are reasons for an intraday trade to look to exit. So, but again, if it backs off a little bit, I'm keeping it on a short leash most likely, and won't be willing to suffer anything but a fractional loss. So it's just hanging out in this area. Nothing, not moving with any kind of gusto at the moment. I do like Euro Yen. That I think has some potential. That is greater than an intraday trade. That could be a multi-hour trade. So that's one that I'm going to revisit before we wrap up. We have about 45 minutes or so here left, and we'll try to make the best of that time. Yeah, very, very quiet. We will, some other ideas, actually, let me just mention that are of interest. Some of the pound pairs, and we haven't gotten around a lot. We've had a couple trades we've been concentrating on. The Aussie Swiss, which stopped out for a loss, or I closed it out for a loss ahead of the stop, actually. And obviously this NZD US trade, which is open and just kind of sitting there. But we will get around to some more charts soon. And in terms of the pound pairs, there were some nice looking shorts that had really still pretty wide stops. I say still because after Brexit, when the pound got slaughtered, the pip risk in almost any pair and any conceivable setup was much greater than prior to Brexit. So we still have wider stops in most setups with the pound. I saw one earlier that I liked. That was maybe 70, 80 pips, which again is a little bit beyond what we like to do in the NY room. It's more suitable for an FX, swing kind of team alert. So that is, those are ones that we'll look at though later, and maybe some of you could consider some of them if you like what I show you in a little bit. So we'll get to that. Thank you for your patience as we just kind of manage these ideas one by one here and work our way to the swing analysis. Stocks having a nice bounce, I see, at least in the futures.
Yeah, they are. They're up overnight. They just keep kind of going back. Yeah, stocks. If you follow stocks, whatever the S&P, on what was it, 2 Fridays ago? Yeah, a week and a day and a half ago, they tanked, ate it really, really, really hard, and then right to support though. And since then, they've kind of just gone sideways, and they're kind of ticking up more and more now. We'll see if it breaks out of that little range. But no, I think stocks probably go higher from here. I think they're overvalued. I think if you're a pension fund, you're screwed if you just have a bunch of U.S. stocks right now, because over the next 5-10 years, their returns are going to be below. They're going to be low. They're going to be 4%, probably lower. Average annual returns, and those pension funds need better returns than that. But for my time frame, most of anybody else's time frame, I think stocks for the next 6 months up to maybe 2 years, I think they probably go higher. But who knows? I mean, that's what's interesting. I say a lot of things where it's like this is what I think is going to happen. This is what I see, what have you. But that's what's awesome about risk management is guess what? You know how you know you're wrong? When the market tells you you're wrong and the thing goes against you, right? An idea, if you have a strong conviction on it, you're going to put a trade on. And then strong convictions just mean like I have a really strong view, everything I see says this, and then you put it on. Well, you know when you're wrong when it stops you out. If you're never getting stopped out, it means you're not using stops. And then we have a problem. Why aren't you using your stops? You should be using stops because that's one of the best ways to cut off how much you lose.
Boy, especially in every trade that we issue here always has a stop, period. But, and I have some approach that's non-Forex and actually non-leveraged for the most part that is that doesn't use stops, but the positions are tiny, and it's a different asset class, the whole thing.
Yeah, so, but the strategy, it's built in with, okay, because there's no stops, I have another risk management process for it. Like, it's absolutely designed around that.
No, you're absolutely correct. That is, and I'm not elaborating on that. I'm just saying very quickly.
No, right.
My point, though, is that if you're trading anything with leverage and you don't have a stop, it's particularly a very leveraged market like Forex. Best of luck, because I think personally, I think it's dangerous. I think you got to have stops with, I would say, with any trading, especially when you're new, and particularly any leveraged market. Period. Whether you're new, old, experienced, old, unexperienced, whatever the case is, have the stop. You'll always have a stop here in this room. At least our trade ideas, I should say, will always have a stop in this room. That is just always going to be the case.
And tell you what, with that, putting a stop in a few things. Okay, well, one real quick. If you read a bunch of stuff, you're going to see some people talk about they don't put physical stops in. Okay, if you're running $5 billion, go ahead and figure out what you need to do for your liquidity purposes. If you're running $20 million or less, use stops. You're not that big a part of the liquidity. You don't matter as far as the market goes. No one's gunning for your stop specifically, right? And so use your stops. Second, so what stops allows you to do, even if it's a pretty wide stop, maybe you have some strategy. You're like, hey, I can hold on to this X long and it's only this position size, what have you. That's great. You don't know what's going to happen when you run to the restroom or when you go to have lunch or whatever else. You can have something fly against you, and it might fly past your thing. Right, if a central bank, in FX world, most likely it's going to be some central bank action or some bomb goes off somewhere, what have you, and it's just a big game changer potentially. And so then what happens? You just get jacked. You lose tons of money when you don't, you never want to lose tons. You lose tons more than your theoretical plan was going in and saying, hey, I might lose X amount. I'm all right with that. Stops are basically vital. Again, I mean, if you get to the right trading strategy, maybe you don't use a stop, but that means your position sizes are super small because of that and whatever else. But your risk management process needs to be robust. If you're trading directionally, one or two or three things at a time, stops are basically mandatory. Like almost, I can't think of a strategy where they're not really useful under that circumstance. I know stuff, if you're super diversified, doing a few other things, there's reasons not to. I understand that. But most of us don't trade that way for the most part, and therefore you shouldn't. Like, you'd have to have an explanation of why you're not using a stop, like a really, really good explanation of why you're not using a stop. Like the super, super mega good one. I'll stop stressing that, but I figured that's a ridiculous enough way of saying it to stress the point that it's really, you need to use them.
Agreed. Absolutely agreed. It's Kiwi Trade, just unable to get it going. It's just sitting at entry. Just watching it closely again. In fact, I'm going to exit this position. NZD-US to be exited. Current levels. It started to violate the bar of 2 minutes ago. 2 periods ago, 15-minute bar. And it's bouncing a little bit from that level. But this has just not been able to get going. And I told you that I'd be more apt to exit this for a small loss than to hang around for the stop. Okay, so really, This is more protection mode, the closing of this position, because it's just not able to get going. The Kiwi overall is really not moving to the upside since we've been together. Okay, obviously overnight it did. And there's some prior highs in here. It hasn't been able to do much. Broke out from a nice 15-minute base. That should have some momentum. It didn't. So really closing that is more a protective move and not liking the tape, quote unquote, not liking the feel of trading in this. I've traded a long time, and I know when to be patient. And well, actually, I don't always know, right? There are times when,
on average, he knows when to be patient.
Yeah. Hopefully. I feel that I do, and this could work out. This could rally up to about 10 pips, 20 pips higher, maybe in the next couple hours. That's certainly a possibility. That's what we were looking for. But I'm willing to be protective and just take a fractional loss on this, which I just did. I don't have the numbers yet, but certainly can get them. So yeah, about a 2.8 pip loss is what I have on that. So those who want to hang in, I feel also there's a bit of opportunity cost. While I'm watching paint dry, the equivalent of a.
All right, folks, it's now 10:25. As you just saw, he went ahead and exited that previous trade. What I'm seeing at this point is a lot of smaller losses. And what I'm hoping is as the week goes on, we'll start to get some relatively large winners that will kind of counteract all of these little losses that we're taking here. But I'm going to come back about 10 minutes before they close the room, and that way we can see if they decide to put any more trades on and how this particular trade works out here. All right, so I'll be back momentarily. All right, folks, it looks like our previous trade ended up in a loss, so we can go ahead and take a look at that really quick. I believe it was on the AUD USD as well. So $59 loss there. Not the best start to the week, obviously. Let's go ahead and see what they're going to talk about for the last 7 minutes of the trade room.
Welcome to the webinar. You have entered as an attendee in listen-only mode.
Yeah, there's almost something there, but it's not today or tomorrow, and probably not the next day, but maybe. Well, Wednesday could be whatever. It's an event day, so who knows what happens after that or from that. But
and that's FOMC, folks, 2 p.m. Eastern, in case you joined us late.
Yeah, Bank of Japan, then U.S. Federal Reserve, and then Royal Bank of New Zealand. So that's Monetary Policy Day. We don't get fireworks out of one of the three of those.
Yeah, and it's very interesting.
Yeah, central banks are doing their job, but yeah.
Here you have, by the way, just go back to NZD US, which was closed for just a fractional loss, but let's go to this 15-minute chart here, and you just see this choppiness. It's just made a new maybe 2-hour low here, deteriorating a little bit. Was not able to move to the upside. Doesn't mean it can't from here on out, but coming back again, maybe a 2-hour low or something of that nature. Go over to NZD CAD, and I'll go to the 15-minute chart as well. Okay, NZD CAD 15-minute chart, new high on the day. Okay, so this is very much the tale of today, where it is. It's hard to find one currency based against everything else that's just dominating everything. I mean, you do have upside here in all of these Kiwi pairs, but there's really mixed behavior. And NZD CAD once again challenging this level we saw on Friday, and yet NZD US looks like it's a little tired. NZD Swissy a little tired, moving off the high. So real mixed picture here as we get within a few minutes of wrapping up. Wish we had a bit more clarity or another trade idea that was just super compelling, but not really seeing it. CAD Yen. What do you think about this?
CAD Yen.
I mean, you got CAD bouncing today across most things, but not the yen.
Yeah, we have CAD yen, and then was it? Check out Aussie CAD. CAD's not bouncing there.
Aussie CAD, yeah.
Yeah.
Let's take a look at that. Yeah. That's very
Which
nice
is
chart.
kind of insane, frankly, at this point. Watching it off and on all morning, I guess, and it's like, whoa, it's up, and then wait, it's up more.
You know, it's interesting to see this pattern because it really is almost the same pattern, but with more time. So this was a trade idea that I issued that met entry on this day here. And out of this kind of narrow area where this bullish bar wasn't violated, it's consolidating really nicely. And then finally, and the declining 20 MA was a definite concern because when this short-term average flattens and rolls over, that can be a resistance point, even if it's minor. And it rallied, and then it rallied the next day on data, just slightly before it really collapsed. So we were able to get out of this, I think with a decent profit. But then obviously it reversed and came down the next couple of days. However,
it reversed almost right after you closed it out. So that was 2 weeks ago, I think. Let's see. I can find that one. You closed it out, and before the end of the session, it already reversed a fair amount, and then it kept reversing. I remember that one.
Right. And that was...
you had like a perfect exit. I want to say that was on the 7th or 8th, but I might be wrong.
Well, NZD US really came in. That's what I was fearing with that one, and which is why we closed it out. To continue this thought, really just wrap this thought up. I mean, it reversed back down. You saw the bulls once again showed their strength, another range expansion day, and another consolidation inside basically without violating the low of the bullish bar. And finally, this time, you're able to get some movement, and obviously range expansion today as it makes a multi-week high. So very impressive, and that's what I was hoping for the first time around, kind of staying power that it looks like this might have, even if it's a top short term today. Now you're getting Aussie Swiss just touching back with this. This was closed out for a loss earlier, fairly modest, but a loss nonetheless. And now a bearish engulfing candle almost assuredly. I mean, you do have 2 more minutes left, but this is probably going to close as a bearish engulfing, and maybe this is the top that I was looking for a little bit earlier. NZD US just touching base with this. Again, this came in all the way down to not quite to the 73 area, but below the 20 MA on the 15-minute chart. So just wasn't able to break out and move much, which is why it was closed. So Wednesday should be fascinating, folks. We will have a lot of I think maybe the yen is clearer since there is data starting
before our session.
Before our session. The yen setups will be clearer. We'll be in a little bit of a holding pattern, waiting for FOMC, but I think that Wednesday could be in some regards. So we'll look forward to that. We thank you very much for being here today. If there are any last questions, please send them over. But we will see. If not, we'll see you bright and early on Wednesday. So thanks again, folks, for being here. And Tag, thank you.
Yeah, and thanks everybody. And remember, again, because Wednesday is crazy, if you have yen, USD, or NZD positions going into that day, make sure you really, really like them. Revisit them, make sure your trade plan makes sense for carrying them through a bank meeting. If they don't, maybe you want to put it at a time, what have you. But make sure you think about that going into there. So have a great day, and we'll see you all on Wednesday.
All right, folks, so there you have it. That is our start to the week here. It's currently 11 o'clock on the dot right now. Let's just do a quick wrap up here so we can see where we're at. All right, so at this point, it looks like all 5 trades are losses right now. Like I said earlier, Not a great start to the week. Hopefully this trade will give us a nice winner. And as always, you guys can visit EmpireAmbition.com to follow along with this particular trade or any others that I happen to be in. All right, video is about 45 minutes